I'm Howie Lim. This is Money Hacks by the Business Times.
The impact on the markets has been pretty pronounced, and in many different asset classes, there's been significant volatility, and that goes from the oil markets to gold to the equities markets, a perfect storm in many ways.
Digital trading platforms have completely changed investing, and with the online brokerages and share trading platforms sector heating up, more are slashing fees and offering perks to attract customers. But to stay competitive, they cannot rely on overall trading costs alone. So how do we pick the best to help us grow our wealth? And what are the red flags we should note before we make our choice, like questionable revenue-enhancing strategies these platforms might employ? Welcome to Money Hacks, a podcast series by the Business Times, where we explore useful financial tips to help you on your money managing and wealth growing journey. I'm Howie Lim. And if you have feedback or an idea for a podcast episode, do get in touch, btpodcasts@sph.com.sg. Joining us today, Philip Waters, Head of Asia Pacific and Emerging Markets, OANDA.
Thanks, Howie. It's always good to speak. It's been a fascinating year. The trading landscape is booming overall across the Asia Pacific region, fueled by technology, post-pandemic spurt of economic growth across the region. But with the diverse financial ecosystem across the region, there is always going to be a need to take a unique approach to each market. So a one-size-fits-all approach just doesn't cut it. The reality is, as a result of that, is that brokers around the region have to make a real concerted effort to tailor their products, their services, and the overall offering to each individual market so that you're then properly catering to both sophisticated investors as well as emerging and the newer trader demographic. The dynamic environment, though, presents a unique opportunity because what you end up having is these newer traders coming in from particularly the emerging markets, I would say, across the Asia region that are very eager to learn. They're a lot more tech savvy. There is a willingness and a desire to take more control of their own finances. And they want to, either make a living for themselves. They're motivated by the opportunity to make money in the markets ultimately and capitalize on often market volatility. So this year's been really interesting in that context just because of everything that's been going on. It's been the year of the elections, like the most amount of elections around the world in terms of number of countries, a general theme of people voting for change. That will take us in lots of different directions. The impact on the markets has been pretty pronounced, and in many different asset classes, there's been significant volatility, and that goes from the oil markets to gold to the equities markets, a perfect storm in many ways.
Okay, so that's how things stand right now and how 2024 played out. Now that we're well into 2025, what should we do to look ahead, to stay ahead, fortune favoring the bold and all that?
There's a constant need for more education, more resources, creating more of a community so that people can engage with each other. Because I think ultimately that's how we create the right environment for traders to thrive, especially this newer generation, many of whom are really learning at this point. So that's what we try to do. Focus on that service side, providing as much resource as possible so that traders can be successful in their pursuit, whatever that might be.
You mentioned elections earlier. I feel as though the only one which caught everyone's attention was the US elections and Trump's re-election. Plus, the US is the largest economy and arguably the one to rule them all.
Yeah, and I don't think that's limited to the Asia region. I think that's just a global fact. And arguably the biggest political comeback, maybe even just generally a comeback in world history. But yeah, the impact of that outcome, the result, is significant in a number of ways. If you think about what President Trump talked about in his campaign trail and whether then some of those promises turn into reality, it will impact the Asia region pretty significantly. There could be the prospect of a China-US trade war 2.0. You've got the impact it has on digital assets. There is the impact it may have on inflation as a result in the region. Do we see problems coming back in or fears coming back in that will have issues on that front? The list goes on. So I definitely agree it's the most important of those elections around the world.
Are there changes afoot which might affect retail investors, and how should we navigate them to come out on top, so to speak?
What's been changing, if we just look back at the last year, which in many ways is a follow-on from previous years, is the democratization of trading the financial markets. I mean, that really started 30 plus years ago, but it continues to level up. The meaning of that continues to level up every year. Trading platforms are significantly more user-friendly. User experience is at the heart of a lot of the providers' focus and priorities nowadays, because it's ultimately, in a pretty commoditized industry, it's ultimately what is mattering most nowadays to traders. It's a lot more accessible. There are lower barriers to entry, and that applies across the entire user journey and value chain. So if you think about the ability to get money in and out, which can be in different currencies, that's now a more reasonable cost on the client side, in a more reliable and secure way, at a faster pace. There are lower trading costs generally in what is a highly competitive industry.
Wow. Anything good happening, Phil?
There has been a positive to that on the client side, because we've got all these brokers that are competing on fees, lower minimum trade sizes, increased access to different tradable instruments. There's the ability to trade pretty much any instrument these days as a retail client. More resources. There are a lot of very good providers nowadays that provide a wealth of resources to keep investors and traders educated and to stay informed. And everything now is very mobile first driven. And that list just goes on. Now, so it's not all perfect. Some of the things that probably haven't changed, in light of all of those changes, things can be very overwhelming. You've got the evolving environment, what has created more opportunity, I would say, in the industry. And that has, I would say, attracted more bad actors. So you have now a space that is occupied by a lot of the incumbents that have been around for 20, 30 years plus, and that the priorities of those businesses may well be very different to some of the newer entrants that have been in the space for the last 5 to 10 years. From the retail trader side, it can sometimes be difficult to distinguish between those two types of brokers. One of the things that hasn't changed is the importance of making sure as a trader that you do enough research on who you want to partner with. Make sure you're looking at what they have to offer, whether the business model is aligned with the interest of the trader, and whether you can trust them ultimately. Because I think it's quite easy these days to make the wrong choice.
Still to come, how can retail investors deal with the low-cost brokerage environment? And how can they sift out the noise from social media? More with Phil Waters from OANDA in a moment.
Lens on Singapore is now bigger and better. The same deep dive exploration of socioeconomic and geopolitical issues which impact our lives here in Singapore and the region is now a video podcast. If watching a conversation is your thing, join Claressa Monteiro in monthly conversations about things that matter. Subscribe to the BT Lens On playlist in the podcast tab of the Business Times YouTube channel and start watching today. BT Lens On Singapore, now available in audio and video.
And now, back to Money Hacks from the Business Times.
Social media, it is a bit of an echo chamber. And it's almost by design, because you choose who you follow, your engagement dictates the algorithm's prompting. So it becomes a bit of a self-fulfilling prophecy in a way.
We're speaking to Phil Waters, head of Asia Pacific and Emerging Markets at OANDA, about retail investors navigating the very crowded online brokerage and trading platform space.
It's challenging, and I appreciate that on the client side. Whenever I try and sort of appraise the industry and how we positioned in that space, I try to put myself in the shoes of the trader and think about, right, what is that mindset that someone is going through when they're making their selection, both as a new trader and someone who's maybe an existing and an experienced trader. And the space is very crowded, there's no doubt about it. There are hundreds, if not thousands, of retail trading providers around the world nowadays. But I honestly think I could count on two hands the ones I personally would trust. I've been in this industry for 15 plus years, but there are a select few that I think are really trustworthy, that offer reasonable competitive fees Maybe not market leading on fees, but I think their fees are justified based on everything else they have to offer. The danger with choosing a provider based on price alone, fees alone, is you ignore all the things that they don't offer you or the things that they don't prioritize for you as a trader. So the resources that they give you, the trading tools, the technology, the speed of the platform, the amount of instruments that they have to offer, the risk management. Again, that list goes on. So it's really important that the way you navigate that low-cost brokerage environment is you don't make it just about cost.
What about social media and that many get their information from it? Some feel that social media is more vibe than informative, really.
Yeah, agreed. And I think the danger also with social media is it is a bit of an echo chamber. And it's almost by design because you choose who you follow. Your engagement dictates the algorithm's prompting. So it becomes a bit of a self-fulfilling prophecy in a way. Social media has been the difference between, again, back to the pre-social media days. What it's done is it's changed the speed at which people have access to information. Then if you look at what's changed in the last maybe few years in particular is that the noise around the really good information has got louder. And that's because there's, again, increase in participation, but some of that is with bad intent. There is a part to social media which it kind of feels like a bit of a vibe factory rather than a reliable source of information. So ultimately, it comes down to just being aware of that and then taking a very disciplined approach in how you use the information. So don't use it exclusively. Use it as a soundbite, use it as maybe a warning sign or an indicator. But then it's always a case of, I think, following up on any information that you do take in on social media and then trying to validate that with other credible sources.
Do you have advice for the less savvy investor as they try to navigate this space? Because they obviously would like help and now have to deal with sifting through all the information out there, all the bad actors and ill intentions as well.
A common pitfall that people don't seem to learn from, or despite the amount of times that the good brokers are reinforcing this point, they don't necessarily take it on board, is really making sure you are educated and you are informed before you make your decisions around trading. One area within that in particular is trading can bring out a side to you that maybe you don't know, that you haven't seen before. It's quite humbling in that sense. And there is a massive part around the psychology of trading that I don't think enough people appreciate. There is a lot of education you can do around the sort of technical or practical parts of trading. And I think that several brokers out there really focus on that probably more than they do on learning about the psychology behind trading. That is a really, really extensive subject. I think it's a really interesting area to get into because it extends beyond trading. If you start to understand things around behavioral biases, how your emotions and moods might play a part in terms of your decision making, how understanding your own personality and the influence that that will have on your trading style, and then understanding social pressures as well. So that bit there around education, but then the subsection within that being specifically knowing more about the psychology behind trading. If people get a better grasp of that, they've got a much better chance of rationalizing why they do things a certain way and maybe being a bit more informed just in terms of their own style going into trading.
Oh, that's challenging. On top of all that information to sift through and research that needs to be done, we now have to add navel gazing to the list, Phil?
Just be super clear when you're going into trading on what your strategy is, what your goals are, and what your motivation is. I would say choose your trading style. Be clear on what that is. Is it going to be based on technical analysis? Is it based on fundamental analysis? Try and get a better grasp of your emotions. So the psychology of trading is a big part of this and understanding that. If you get a better grasp of that, I think you'll be in a better position not to overtrade, not to revenge trade, and not, chase losses. Make sure risk management is at the core of every trade decision. It should be a core principle to the way you trade. And then it comes down to just make sure you invest the time to research the provider that you're choosing to trade with before you commit. There is a lot of temptation out there. There is a lot of choice. That choice is pretty narrow if you do the research and you look at who offers the most all in and has the trader's interests at heart.
Thanks for your insights today, Phil.
Thanks, Howie. Take care.
And don't forget to send us an email if you have feedback or an episode idea, btpodcasts@sph.com.sg. That was Phil Waters from OANDA. I'm Howie Lim, and this has been Money Hacks from the Business Times.
This is a podcast by the Business Times. Find more BT podcasts at businesstimes.com.sg/podcasts. Or wherever you get your podcasts. This podcast is meant to provide general information only. SPH Media accepts no liability for loss arising from any reliance on the podcast or use of third parties' products and services. Please consult professional advisors for independent advice.